made you invest in India? Because Australia is also very similar, and yet Australia has not come to India. So what made Canada invest in India?
So I think Canada and India have a lot in common, democracies, and both from the Commonwealth culture. But I think more important, what the India story itself, I would say the fundamentals of India. So whether you're looking at growth or the demographics, or the fact that actually what excites me the most about India is the entrepreneurial spirit in India. And then add to that the trends that we heard about on digitization, the penetration of smartphones, internet. I think it's an economy which has a long runway to growth. So I think for us, and I'll speak for CDPQ, the way we saw our investments worldwide is really through partnerships, and we felt that we could find partners in India with whom we could invest long term, who we share the same values with, and build businesses together. So the availability of such partners was one of the driving factors which made us comfortable with coming into India.
Okay, and you've been here how many years?
Since April 2016 is when we have been investing, but we've been sort of studying India, understanding India, making a lot of trips and meeting up people since I would say 2013.
Have you seen any change in the maturity level or the sophistication level of Indian managers, specifically obviously in the PE, VC industry?
Definitely. So one, we have seen that there is a lot more activity around the PE, VC stage to the size and scale that interests us. So we would need to be able to contribute, I would say, a minimum of at least $100 million, which means that the fund should be in the range of 700 to $1 billion. And we are starting to see more and more funds up to that scale. In terms of managers themselves, they are, I would say, people with deep either domain expertise or geography expertise, have established a track record either with larger funds like the more established global funds, and then they've sort of spun out on their own over here. And also some of the funds have tied up with international funds as well to sort of have the best of both worlds. And all of that has been an evolution which has really made us more and more interested in the Indian equity fund and PE and VC space, I would say.
Is there any feedback to the Indian managers, the PE, VC managers, in terms of things they can do better?
I would say that there is really a role to also sell the India story, not just their own fund story, because for a lot of outside investors, the first thing that you have to get comfortable, as you yourself mentioned earlier, is the country. And there are many things about the country that are not as well known or as well marketed outside of India. So one, I would say, really to be champions of India's, not in a blind way, in a sort of understanding and not assuming that people outside really have that information. The second, I would say, is really to focus on 2 or 3 things. One is track record and return to investors. That's the most convincing for any investor to come in. The second is the team. And there tends to be sometimes, the key fund manager as a big sort of star figure, and then others around them. Whereas for us, what we look for is really the whole team. And so the sustainability of that whole team, the incentivization of that team. So because usually it's not just one person who will manage a fund. The third, I would say, is where there is a domain focus fund, is really also to do some kind of context setting in terms of why that domain and why not something else. So that's something I think funds, because you are so convinced yourself as a fund manager that often you forget that the investor, the LP, is probably not as familiar and needs to have that context setting as well.
So as an example of that, I think you've invested in distressed debt, right? For example. So someone should have sold the India story and then the distressed debt story before selling themselves. And then I'm assuming you would compare them with at least 5 other managers, right?
Yes.
So that data standardization is also very important for you to easily compare across, right?
Absolutely.
So
And
that's my site will help.
No, that's exactly what we did,
Yeah.
was to do that mapping and to say who in the distressed debt space is really the one that we would like to work with.
Before you got to that, how did you study which type of opportunity or which asset class within India, whether it's distressed debt or real estate or infrastructure or listed, how did you decide on that asset class, and what information would you like to see coming from India to help you with that decision making?
So we have a strategy session that we go through every year as an institution, and we work really bottom up. So since we have 5 distinct asset classes: infrastructure, real estate, private equity, listed equities, and fixed income, we work with each of our asset class teams to say, okay, in this country, is there a universe of possibilities or opportunities, the right kind of partners? And in some cases, we do look at it and say, okay, this may not be the right moment or the right country to do that, right? But once we've kind of defined the broad sectors, then we do more of a deep dive. So, for example, we did that with stress debt, we did that with healthcare, we've done that with different subsectors of infrastructure, and so on and so forth. And that identifies the universe of funds, as well as if we are doing a direct investment, then potential partners, and then we work with that.
And you're indifferent to fund versus direct? You do both?
No, I wouldn't say indifferent. I would say each plays its role. We are starting to do more and more directs, but since we were doing mostly funds, it's just I would say skewing the balance in the right way, but we will continue to do both funds as well as direct investments.
Is there a message to IVCA to help with this sort of context setting and selling of the opportunities? Is that something they should be doing?
Yes.
Or the government?
I think more than the government, I think it would have a lot of credibility if an association like IVCA does that. Availability of data is very, very important. Because as investors, you want to look at comparables. So I would say establishing a global set of comparables would be fantastic, but even within India, comparables. And now, as we have more and more private equity funds, I think we can have that data, and we need to be able to present it in a sort of systematic way, and so that we can also track trends and really learn more about the industry. So both IVCA and your new portal.
And my new portal, and I actually have a stake in another one called Diligence Vault, and I'm a CFA. So what I can't understand is why GIPS standards, as you know, exist and have been for a while, and yet we try to reinvent the wheel with data standardization. I mean, we can just adopt the GIPS standards, right? Do you follow GIPS? Do you?
Yes, we do, and that's one of the things that I've noticed in India, that we want to have our own standard, and I would say nothing wrong with that, but then you have to make sure that it's comparable, because at the end of the day, we are not an island.
So for a global investor, you have to compare across countries, right? So you need a global standard, right? Right. Okay. Well, let's pass that feedback on to IVCA. Just sort of winding up. Anything else about India that you want to give feedback to? What would you like to see more of, for you to invest even more in India?
I think we have seen like some of the changes in the, for example, things like the bankruptcy code, since we are an investor in the distress space, that's important. I think what we would love to see more of is much more focused execution. So I think we are getting there in terms of the regulatory framework, but if we could really have execution at a more clipped pace, that would help a lot. I must say that by virtue of being a democracy, which is something else that attracts us to India, there will be, a lot of debate and discussion, and we are, after all, the argumentative Indians. So, to that extent, there will be debate. But I think there has to be a point when we say, okay, that's fine, but let's now go ahead. And when we have done that, it's had incredible impact, and that's what I'm hoping, that between the government and associations like IVCA, that we can continue to push on the regulatory, on the taxation. Just to give you a small example, we can be long-term investors in any sector, but particularly for sectors like infrastructure, we are ideal as an equity investor. However, because of the taxation system where we have high corporate taxes, high dividend distribution taxes, we end up not being able to play the role that we could in that, just depending on the yield from those investments. Instead, we have to have a sort of artificial exit at some point, which in fact shortens the tenor of our investment. And we have to do that because otherwise we don't get the commensurate returns as we do in other global markets. So one of the recommendations we have made is, just to pass on the benefits that are being given to infrastructure InvITs to any long-term investor who's investing in infrastructure. And I think that kind of reform, regulatory change, will attract more long-term capital to a space like infrastructure.
Okay, so feedback to government is faster debate and more tax.
Yes.
Not incentives, but at least a comparable tax with InvITs.
Yes.
Okay.